What is up, everybody, and welcome back to another video. This is How to Invest. Spencer here, making a video on a Saturday because one of my biggest pet peeves is I like to watch a lot of YouTube videos, especially on finance, and not too many people post on the weekends usually. So I'll be making one here today. This one is again on Playboy. I've been pumping it out a lot, but this stock continues to soar higher and higher. If you look at the stock chart, it rose just 7% again up on Friday. It was up almost 10% at one point. If we look at 5 days, it's up almost 40%. And if we compare that to the rest of the market, we have the S&P here over the 5 days, it's down. If we look at the Dow Jones, down for the past 5 days, and also the NASDAQ has been down. So this is completely outperforming the market. And I've seen a couple people asking on different brokerage sites, asking why is this going up so much, and kind of puzzled about the move about this. There's no news coming out or anything, and I am here to try and spread some light on that. So strap in. The first thing I wanted to look at was the analysis. So here we don't have too many people analyzing the company, and this is just on Yahoo Finance. Probably not, the most in-depth research, especially. Personally, I think that they'll beat on most of these numbers, but we will take a look. So there are 3 analysts, and for this past quarter, they actually gained 13 cents per share. If you times that by the amount of shares, you will get the amount of actual earnings. So if you look here at the statistics, it will tell us that they have 33 million shares, 33.56 million shares, so about a tenth of that, so about 3 million, which is pretty good for the quarter, considering that they just went public again and are just kind of focusing on profitability again, because they had a pretty big lull for almost a decade or so, at least. I'm not quite sure how long they were on the private market. But if we go back to the analysis, they are predicting for the next quarter that they will earn only about $300,000 if you do times that out. And for the current year, they have lost over $1 per share, $1.01. If you times that out, it's a little over $33 million, which isn't too bad, considering they're just kind of trying to ramp up their growth and really set the stage in the right, set this company in the right stage for development in future years, which I do not really mind, as long as it is going to get better. And the analysts do agree with me that this will get better pretty rapidly. So going from this past year losing over $1 per share, they will go to earning over 0.3% on each share. So if you times that out, it's about I think $10 million, which is pretty good, considering that they were losing money. And the best time to invest in a company is when they are going from losing money and then they are focusing on profitability and becoming a net positive company, where they're getting these positive cash flows, where they can start to invest more and hopefully buy more companies and really focus on mergers and acquisitions and how to grow the company, which I think Playboy definitely is heading towards. If you guys have read the investor relations page on their website, you'll know what I'm talking about. I'll probably make another video on that one. But if we look down here, you can see the revenue estimates, which I personally think that they'll probably beat on some of these by quite a big margin. Just that how fast of a rate that they're growing at least that I'm seeing. That the high estimate or the bull case would be just under 200 million for the year, which is pretty good. in my eyes, but I think they can do upwards of 250 million, if not more. If we look at the EPS, this is the same numbers as up above, and they don't have EPS revisions, and the growth estimates are 130%. So that is pretty insane. Most companies are growing at single digits here. Like a growth company could be considered if you're growing at double digits over a certain amount of years. And if this company can grow over 100% and even capture half of that percent and continue it to grow over years and years, that is phenomenal. If we look into the stock chart, was the other thing that I wanted to get into. If we look at it, the technical analysis, I've gone ahead and put in some moving day averages. So if we zoom out here, there we go. So in purple is the 50-day moving average, in orange is the 21, red is the 10, and the light blue is the 5. So if we look at the stock chart, if we zoom out a little bit, we can see, let me adjust the candles so we can see a little bit easier. Go to 1 day. So the date here, it's not giving me the date. But they went public at $10, which is what every SPAC goes public at. Not everyone, but most SPACs go public at. And if you look here, they really broke out. I was trying to get the date, but I'll switch back to the hourly candles, give you a better look. They broke out across all moving averages around $12 at, this was about a week and a half ago. I think it was the 12th. And from here, they have continued to soar and stay pretty close to the 5-day moving average. And anytime they get to the 10-day moving average, they bounce right off of it. We haven't had too big of a scare, and it hasn't even come close to the 21-day moving average. So it has pretty good support and momentum going up. It has good liquidity in the market. I think a lot of people are starting to really realize the potential of this and starting to buy in more heavily. So my only thoughts would be keep an eye on the charts moving forward. If it does start to break lower and start to test the 10-day moving average, and if it breaks that and it starts testing the 21-day moving average and breaks the below there, I might take some profits, and just because this has gone up quite dramatically, like I said, almost 40% in the past 5 days, which is just ridiculous considering the market right now going down, and most stocks being either neutral or going down pretty drastically with the market sell-off with the bond fears. But yeah, I would advise to take some profits if it does test these, but I am not opposed to holding this long term as long as it stays above these moving averages. If we look, I think there was one more thing I wanted to say. Not quite sure. Let's go back to the summary and statistics. I was gonna say this is a very shorted, or very smally shorted company, which is a pretty good thing. I don't think a lot of people are really wanting to bet against this company because they know the power of the branding and they just think that they'll be able to grow over the long term. And I think that was about it. Thank you guys for tuning in. Have a great one.